Okay. Now we know a couple of things are happening. We know that the market has not gone up and made new highs. We know the market's still in a bullish background overall, trend wise. Okay. But the action of week is a lower trade range that is formed. Like this. Okay. This is a lower trade range that is formed in the market. Does everyone see that? When I mean a lower trade range, in other words, if the range was like between these two levels, okay, if those two levels, then the market would be closer to the highs and probably some type of absorption. Okay, the fact the market closed higher, it has a lower trade range, looks like distribution that's occurring in the market. Okay, so what do we need to see if the market remains bearish? Well, what we need to see in the market now is some type of supply increase the market. Okay, so we're looking for some type of ending action, right? Some type of ending action to the upside to see if the market is willing to mark down, okay, and see what happens. Okay, so we got selling, markets here, we got selling, a couple bars here, so that the down bars are more pronounced than the up bars. And we'll see that. Okay. Okay. So what we need to see is that the market gets to the point. To where what? Market gets to the point to where we get more selling bars, the up bars, and then we have some supply. Well, now all of a sudden we get two down bars. Okay, relative to the area, wider ranges. Would that be considered supply? Well, it's on the right hand side, right? It's on the right hand side, and it looks like the market now gets to the point to where the market gets supply, or at least selling, on the right hand side of the market. Okay? Able to see that? Okay. So, what is important? What's important is the fact that the supply came on the right hand side. It's probably some type of weakness on the right hand side to the market. Okay? That weakness in the market is very, very important, because that weakness is going to tell us what the market actually is looking to do on the right hand side. Okay? So, if the market goes up, shorting a thrust here, break, increasing volume, supply, and the market now has broken down. Okay? What are the chances of this being a spring at this point? Well, pretty unlikely, right? That we have some type of spring, right? Pretty unlikely that some type of spring, because the market's staying under the area of support, and the market's just very, very weak. Okay, so we expect to retest at least down to this level here, because we know when we break here, we know that the market is going to retest this vertical demand bar and possibly down to here. Okay, those are two targets we have. Market rallies. So what would you say about the quality of the action right now is? Well, what you can say is that the market is not running away from support. The decreasing volume is when the market is trying to rally. When the market is trying to rally. Okay? So, market goes down, goes here. Now, would you say this is a bullish bar here? Well, the volume is high, but the range is not really high, is it? Okay? So it's telling you that the market's getting some type of buying, but it's really an effort versus result type of bar. Right? Well, we'll see. So we know that the break-even ice is the area that you want to sell the market, and we know that the market's at 166. We could probably take the market down to here. Okay, so we're looking for that type of action. Market goes higher, and what happens? Okay, well, would you say that's demand? Well, if this was selling here, look at the volume here. Would you call that demand volume after selling in the background? That's the question. Well, the answer is no, because the volume's not high enough. Okay? So that could be the case. Now, the fact that we broke to the downside, okay, and with a bearish background, makes this market look like the possibility of being weak, right? Because we really need demand because we have selling in the background. Okay? So, that's fine. We get the action there, and then what happens? Well, what happens is now we get to the point to where the market should have either a retest in here, up until here, which we consider LPSY, or just a retest here, where the market retesting the break of the ice. So looking for some type of ending action, maybe this level, to get short because of the background. Well, here, what about this bar? Look at these people. These two markets. One is increasing volume, right here. Next bar, afterwards result, same volume, smaller down, and the market trying to go up and increase the volume. So the market's exhibiting, to me, some type of buying and selling matching. Okay? But this is really important. With the background being a little negative, it's kind of like the tie goes to the runner of baseball. Okay? With the background being a little bit negative. Okay? Hey, Brian. With the background being negative, okay? The retest probably makes a negative statement. Okay? Because we need demand to come out of here. Okay? Because of the bearish background. So we need demand to come out of this area. Okay? We need some demand to come out of there in the area. Okay? That makes a really, really, really big difference. Okay? So, okay? The market then goes up, attempts to spring. Okay? Again, increasing volume, high and close. Okay? So we know that we get some buying at the lower levels. Why? Because the volume starts to increase. Okay? So the volume increases to the market. Okay? So we need to get demand come out of here. We got some buying going lower, but we don't necessarily have demand going on. Okay? So if this is absorption to the market, okay, usually see with the background of accumulation. It would not be absorption in the market that was coming from weakness, right? It would be inability of the market to show demand at this level. So we need to see demand to overtake that selling at that area. Okay? Market's got to jump over this creek. And this bar here, this next bar is the kiss of death for the longs. It'll show you the thrust, demand. We have to take off, and look what happens here. This bar here just told you the story of everything. Okay? Does everyone see that? Try to get these lines here. So this bar here had increasing volume to the downside and resistance. That tells you that we thought was a spring. That tells you what we thought was the possibility of absorption is now what? Okay? Again, that market needs to demand overcame supply, and we didn't get that, so the market showed selling. Once you see that selling, with selling in the background, that confirms the market's undergoing some distribution. Okay, that confirms that. Okay. Okay. Then the market tries to do really nothing next bar, right? But this bar becomes a very negative bar, right? Because it's some type of shakeout or some type of bearish news that came in here, and the next day takes on a different personality. We know the market did not have a good reaction. You say, well, Gary, it's a break on light volume, right? It's a break on light volume. And guess what? That's true. It's a break on light volume. In this case, with selling in the background, the break on light volume is not bullish. Okay? The break on light volume. Why? Because the market needs to show demand. So the fact that the market is lower, on low volume just means that what? The market lacks demand. And the market needs demand to overcome that selling that's in the background. Okay, so not all bars are equal, and not all volume is equal. Okay, people treat volume and price as equal. They think the market's going up faster on higher volume than going down. It's not true. It's not true. Okay, market then goes down, and what do we see here? Market shows increasing selling to the downside, makes that bearish. Makes that bearish. Now we have a retest of a reactionary bar. Okay, they will. They're gonna win the series. So they get down there. They get down there, and the market breaks. Next down here, it breaks. Okay. Now the question is this a spring area? Would you buy this spring? That's not the question. To retest a reactionary low, would you buy this spring? And if you're somewhat aggressive in buying a spring in a weak market, your stop has to be right here, right? You're not going to give a lot of room if the market's weak. Okay? If you buy the market. Expecting maybe to go to here, right? So the risk to reward is decent. It's just a matter if it's the right trade to buy that particular spring. Okay? So, again, we have to think of the market just being from a negative bias. Okay? Market breaks will take you out. High volume action. Would you buy that? It's increasing volume to the market. This is increasing volume. So we could still have a spring in that particular range. With the high volume, would you buy that market? And the question is, remember, this market now is having a spring of the spring, right? Spring of the spring area, right? Or potential-wise. The fact that the market is making lower lows on springs does not make the market positive. Okay? Was this a positive bar? Increasing volume right here. It's lack of demand, right? It's lack of demand. So we look for some type of action to get short from. What you can see this bar here. Hey, effort versus result. Increase in volume, slightly higher. As the market's going higher, the sellers are selling, matching the demand. The sellers are matching the demand there, which makes a negative statement. Effort versus result. This is somewhat stopping action to the upside. Effort versus result means that the CM does not want to show a positive bar by letting the volume give an increasing range to the upside. Okay? Okay? Market goes up, short of thrust, breaks at high increased volume. Volume upside is weaker. Get a rally here, get a rally here. Okay? So our job is to what? Is look for markets. Our job is look for markets from ending action, right? Okay? We know that this 166 resistance, we know that. We know that anything in this area that we're looking for an up thrust or short of thrust. And the market breaks, increasing volume. Would you expect the market to spring there? Would you expect the market to spring there? Well, that takes you to where we're at right now. So, the importance of this particular market, okay, the importance of this particular chart is what? Is that once we broke that ice at the 170 level, after that sideways cause, once we broke that particular level, okay, once we broke that particular level, the break of the ice, the sideways action that we had was distribution. Then the market had that distribution, the sideways action, and the market broke back down under the 166 level, which was bearish as well too.